Hello there, this is Nirav. In this session, I'll be doing Elliott wave analysis of gold and looking at possible price targets for the same. So for the purpose of this discussion, I have the 60-minute chart for gold, and the primary view that we are following right now, if you have not watched my previous videos, is that we are having this impulsive leg from 1194 up till here. And after this first leg completed over here, we have two schools of thought. The first is that the second leg is completed over here, and the other thought or the other count is that the second leg is going as an ABC flat type of correction and would complete somewhere over here. I'll be looking at both of these possibilities and a third possibility that will be discussed later on in the video. So if you want to know the complete picture on this market, then you will have to watch this video till the very last. Also, if you are new to Elliott wave and would like to learn more, then I do have Elliott wave course. Link for that is in the description. So let's get started. The first count says that the wave 1 completed over here and the second completed over here. So there are a few things that point to me that this count is not very, convincing. And the first reason is that the Fibonacci retracement starting from the starting point of wave 1 till the ending point of wave 1 gives the retracement as even lesser than 38.2. See, the 38.2 is over here and the market just went down till here. So it's not even retracing till 38.2, and generally what we like to see is the market to retrace up till either the 50 or 60 mark. Okay, that would be somewhere over here, this box region. So that is the reason one that I don't think this count is the best fit for this market. The second reason is that if we assume that this count is the one which is playing out, that is, if we assume that this is 1, this is 2, and after that we should have another legs of 1 2 1 2, a staircase type of formation, something like this, 1 2, then 1 and 2, and then 1 and 2, and then a break of this level for the third of the third of the third. So if that is the case, then if that is second, then that would mean that this is some kind of 1 2 3 4 5. So this would be 1, this would be A B C, this would be 2, and then this leg up would again be 5. Now here comes the problem. The thing is that this leg up definitely does not look like a 5. It basically looks like a A, B, C, or a 3 leg up. Okay, so basically this looks like a 3 leg up, and if I have to do some forced count over here, then I can think of this leg up as 1 2 3 4 and 5. Now yes, it can be counted as a 5, but basically that would be more or less a forced count. So that makes me think that this is not the main count. This is the second reason. And now the third reason is that this trend line has given a good resistance, and you can see it was tested here and then here, and the market just sold off from here. So this is the third reason I think that this is not the main count or the count that the market is following right now. So this was our count 1, and now look at count 2, and the count 2 is basically saying that this is A, this is B, and this should be a C leg down, coming down as a 5 wave leg. Now if we look at this count in a little bit more detail, then we have a clear ABC X ABC, so double zigzag, again an ABC X ABC, again a double zigzag, so this can convincingly be taken as A and then B, and this should be something like a 1 2 3 4 and 5. Now let's look at the target for this C leg, which I think is the count that is playing out. So the targets would be, I'll be using the trend based wave extension, starting from the starting point of wave A till the ending point of wave A and projecting it from the starting point of wave C. So we have the rough values coming around at 1250, 100% mark. This should be treated as target 1. 161.8 coming at 1236. This should be treated as target 2. Basically these are the two main important levels. And if we look at the third important level, which is 261.8, then it will be this region around 1215. So this can be taken as a target 3 in the case that this market comes down a bit too much. Okay, so these were the two main counts I wanted to discuss over here, and the strategies in regards with trading. Let's look at those. So basically, let me repeat the count 1 again. The count 1 was that wave 2 is ending over here. So if that was the case, and this was again a 1 2 1 2 type of structure, then the thing to notice over here is that if that is the case, then we will measure this wave 2 retracement from the starting point of wave 1 to the ending point of wave 1, and it is already achieved the 61.8% retracement mark. So if this less probable count is to play out, then I will expect the market to move up right from here. Okay, right from here the market will move up, because you know it's 1 2 and then 1 2, and it's already coming at the 61.8% retracement mark. So most probably the market will move up from here. It would be the indication that the count 1, which I think is the less probable count, is playing out. Now the invalidation point for count 1 is this level of 1244, because if this is wave 1, then wave 2 cannot retrace more than 100% of wave 1. Let me clear it. So if this is wave 1, then wave 2 cannot retrace more than 100% of wave 1, so it should not go below 1244. So a low below 1244 would indicate that count 1 was not the count playing out, and basically that would be that. Now coming to count 2, which I think is the more probable type of count. So count 2 basically states that 2 is coming down here as a 5-leg down. Now if 2 is coming down here as a 5-leg down, then we should definitely be seeing a downward movement in price from the opening session onwards. The price should not make highs basically above this level. I don't think it should go above this level at all, somewhere around 1260, and should fall down. I don't think even it should go even to 1260. I mean, there should be a little bit of retracement from here on, like let's say around 1258 or something, and then it should come down from there on. So it's basically a matter of looking at the price action when the actual market is open. To be more precise, I would like to take the shorts on clear break of this recent low, which is around 1250. That would be a more better way of looking at which count to trade with. Okay, so I have discussed the count 1, the count 2, and the basic trading ideas for the same. Let's look at the third count that I was talking about in the start of this video. So basically, before moving further, I like to point out that this structure up can be counted in one another way, and let's look at that in this different count. So this is the low of 1194, from which we discussed everything on the last chart. So in this chart, as you can see, I have counted it a little bit differently, and the reason for that would become clear very soon. So basically, I have counted this leg down as an ABC XABC, basically a corrective structure. Then I have counted this leg up as an A, B, and then a C is an ending diagonal. So that would mean that this is a 3 kind of structure, this is again a 3 kind of structure, that would lead to a 5 kind of structure down. And if this is the actual count playing out, I would say this is the a bit of on the less probable sides right now. That is, right now the market does not seem to offer much evidence for this count to play out, but still it could play out. So if this is the count to play out, then we can calculate the targets for the C leg from the starting point of wave A to the ending point of wave A, and projecting it from the starting point of wave C. So we will have our targets for C leg coming around 100% at exactly 1200, and 138.2 at 1174, and lower targets coming at 1158. This would be the 161.8 retracement mark coming at 1158. So what I have changed over here is that in the previous count 1 and count 2 that I discussed on the last chart, I was considering this as wave 1, this as wave 2, and then this as another leg 1 and continuation as leg 2. But here what I'm discussing is that what if this second leg has not completed over here? So if the second leg has not actually completed over here, then it should be progressing. It can progress like a different number of structures, like a triangle, a complex correction, but the most probable correction that it can continue as is a flat type of correction. And if that is the case, then it should be like A, B, and then C. So this is the last possibility that I wanted to discuss. So by now we have discussed 3 possibilities, and this last possibility, which is count 3, is the most bearish. Count 2 was also bearish, count 3 is also bearish, count 1 was the bullish one. So we have 2 bearish counts, 1 bullish count, and you can see why my bias is to be on the short side in this market. Clearly we are at a point where a little bit more observation would help us to verify which count will play out. That is, after the market opens, look for the price action and decide which count to follow. But if you are looking for a probabilistic type of analysis, then the probabilities are favoring the bears in this market. At least at this point it would seem like that. And let's just repeat some important points over here. So basically this point here is a bit of a confusion point, because the count stating this would suggest that this is the ending point of wave 2 and the market should move up from here, whereas the count suggesting that this is not wave 2 but 2 is coming over here, which suggests the market to move down from over here. And the count 3 was totally bearish. It was saying that the market should go down even lower than this 1236 mark. Okay, so a bit of analysis of price action and the market movement after the opening hours would be necessary to play out this market. Right now I would like to wait for the market to give some clues that which direction it is headed. Of course, if you are a swing type of trader, it is not much of a problem, because you can just go short over here and place your stops above 1272. Double stops, that would mean that if the market crosses this level, first your short position would be covered and then automatically you will enter a long position. So for swing traders it would not be a problem, but from a price action perspective, using it for intraday, I definitely think that this is a decision making point or an important point, and we will have to look a little bit and take clues that where the market is headed. So now we have discussed all three possible ways which I think this market can move, and we have also discussed the trading strategies that can be followed in each of those scenarios. So that was all for this discussion. I hope you found it helpful, and if you did find it helpful, then definitely share it so that I get more views and more motivation to make such videos. And as always, if you want to learn more on Elliott Wave, then you can enroll in my Elliott Wave course. Link for that is in the description, and I hope to see you in the next one. Thank you.